morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday the 13th, so be safe and get lucky today. It's July 13th, and we got a couple economic news releases scheduled for today before the weekend here. And first item is the Producer Price Index for June's numbers. And what this is basically the inflationary level gauge for the wholesale side of things. They kind of look at it, but it's not the most important primarily because a lot of times, even though prices go up for the wholesalers, they don't always pass that on to the consumers. So the consumers side, like the PCE and the CPI, are the ones we kind of really look at more, put a little bit more weight to it, their value. So we'll take a look at May's numbers here. We had a negative 0.1%, or I'm sorry, negative 1%, and we figured it'd come back a little bit to about negative 0.2%, and it went up 0.1%. So we had a contraction, obviously, in May, and we figured it'd have a slight contraction for June, but it had a slight increase for inflationary level. Core. So what that means is that we take out the food and energy, which is very volatile, and just give us our core. And this is the meat number that we kind of look at. And we had 0.2% in May, and we figured it would be about the same, and came basically in that forecast, so there's no surprises there. Still tame numbers here. We're not having anything outrageous that's going to skyrocket that we're seeing so far for inflation, so we've been pretty fortunate in that level. And then lastly, we got the University of Michigan Consumer Sentiment Report for July's numbers, and we had a 73.2 for June. We figured it pulled back slightly, or be pretty close to it, and it pulled back a little bit more. So about 70, we got 72 on there. So it means that people are losing a little bit more faith where the economy is going and stuff. So that's why I kind of gauge it, but it's not quite down to the drastic point of where we were on our lows. So we'll take a look at the headline news now, and we're actually having a little bit of a rally in the stock market. Some people might want to look at the inflation number or the China's GDP coming in at forecast, but it looks like with all the days we've had the stock market being down so much that now a lot of the stock values are there, so they're kind of in an undersold position. So that means there's probably a lot of good buys in there, so now the investors coming in and start buying it at those lower levels right there. So I think that's what's kind of going on right now on the stock market, and because obviously, who wants to see China's economy going down, obviously, because that means it's going to affect us as well as Europe and everybody else here. Next item to note is we'll just jump over the bond market and see what interest rates are doing. Interest rates are about the same where we were yesterday. We're kind of hanging that mid-range right there at 105.72. We left off yesterday at 105.75. So we're just about, like 3 basis points off from that. So there shouldn't be any change in the interest rates today versus yesterday. All right, folks, I hope you guys have a wonderful day today, and just watch out for any black cats. Thanks for listening. Thanks for stopping by. And if you guys want your email, these reports emailed to you on a daily basis, stop by Mike's Daily Market Report and subscribe. Have a good weekend, and I'll see you guys on Monday.